Hey everybody, welcome. I'm Stephen Kalajian and welcome to Back to the Futures. Wow, what a day on the index futures here. We see the markets up right now. The S&P is up about 1.5%. Nasdaq's up over 2%. And we hit the low on August 5th at 5120 and 13,370 on the Nasdaq futures. And we've rallied now on the S&P futures north of 400 and about 450 points, in the Nasdaq futures well over 2,000 off those lows in just a matter of 9 business days. We were deeply oversold, and one of the things when I look at my my chart overlay that I built is that normally the deviation is about 50 to 65, 70. At the time on the daily charts, at the time when the S&P and Nasdaq futures were making those lows on August 5th, we were over 330 points away from the price to my moving average, my 10-bar weighted, which goes back to the inception of the asset. And on the Nasdaq futures was well over 1,600 points. So what happened today? Well, unbelievable patterns here. We got the jobless claims number. They came in weaker than expected. Retail sales came in better than expected. But I think what the market is thinking here is that because even though it was only 8,000 jobless claims, they were looking for 335. They came in at 227. I think the mindset here is that even though the Federal Reserve maintained that they are not going to cut interest rates until their CPI number comes down to 2%. We had the CPI a couple of days ago, yesterday, that came in at 2.9, under the 3. And then the PPI came in on Wednesday, much better than expected. But with that being said, inflation is still very high. And the Fed maintained that they're not going to cut interest rates until the 2% target is hit. However, last week we had a really weak jobs number. And they did revisions that were weaker than expected. And then if you look also at the today's jobless claims number, they were only 8,000 less than the consensus at 235. So with that being said, now the market's all bulled up, thinking that, okay, the Fed's going to start cutting rates, not because of hitting their CPI number at 2%, but because the job markets are slowing and they don't want that to happen for the markets to go into, for the economy to go into a recession. So what happened today? Well, beautiful patterns. But now, before we even get into that, if you look at, I'm going to show you, I've had nothing but buys on the 30 and 60-minute time frames on the underlying ETFs for the last 4 or 5 days. And when you trade the futures markets, my research has shown me that during the U.S. session, you can't just trade the index futures by themselves. You need to have the underlying ETFs follow. So today, for example, okay, I want to show you here that this happened this morning, right here, right before the CPI, the jobless claim numbers came out, and we got the big push up here, and this is a beautiful bull flag right here on the S&P futures. Right after the number came out, you can see they pushed down here, down to the I think it was the 17. What was that? 17 here, I believe. And beautiful pattern here. They pulled in, and then they pushed up, and then this is the first pullback right here on the 5-minute time frame. Beautiful oversold condition. You can see right here, I do look at multiple time frames when looking at the continuous contracts. I look at the 3, the 5, the 15, the 30, and the hourly. And so when we got this really great pullback on the S&Ps, I was looking for a range between the 22.5 and the 27.5, 28.5 range. They got down to 55, 26 and a quarter, and they just absolutely launched right here. Now I'm going to show you the pattern, okay, on the STSs and the spiders that confirmed it. But this is the S&P futures, and you can see here, okay, that when we got this buy, All right. And then here's the other buy. We got my indicator for my algorithm reversed to buy at exactly 1025. You can see the MACDs are very strong here, very strong. Yellow over blue, I call it a positive MACD. You had a rising ADX. You had big buying pressure here, and we got this. Look at these patterns. This is the first pattern in the pre-market. This was a great pattern right here. Okay, and then we pushed up, and then we got a nice pullback here on the 3-minute, and this is another pullback here in the trend. So today is obviously a trending day, right? And then if you look here, this is the pullback right here, and then this pullback right here, right before we came on, is the oversold. And this is the first pullback on the 15-minute time frame since the 15-minute time frames reversed to buy. I wanted to show you the underlying ETF, the spiders here. Okay, now you can see here on the spiders. All right, you can see here on the spiders coming into the day, we were already bullish on the 15-minute time frame and on the 15-minute time frame, and this is the pattern here. You can see. Let me just type this in here. I don't know how this got Bitcoin here. Let me just change the symbol, SPY. Okay, so here's the pullback on the 15-minute time frame. You can see coming into the day that we were already bullish. So when the S&P futures reversed to buy on indicator 4 on the 15-minute time frame, we were nothing but up, and away here. So when you're seeing this pattern, you can see the gap up here, right? And then we got this beautiful pullback into the positive MACD, big buying pressure into the ADX, and really great pattern there. And what you see there, okay, what you see there is this pullback is the first pullback with this big gap up here, right? With this big gap up. And then you got the you can see how the 15 and the 5-minute time frames were still bullish. This pullback right here represented the pullback on the 15-minute time frame. But more so, well, look at the correlation that I'm showing you here. Look at the correlation that I'm showing you. When you got the 15-minute time frames, okay, and the 5-minute time frames all swimming in the same direction, along with the 30 and the 60-minute time frames, okay, guess what? When the S&P futures reverse to buy here, what's going on? If I type this up, let me just type up ES, sorry, right here. When the S&P futures reverse to buy right here at 1025, okay, you should then that time frame not only correlated with its 15-minute time frame, it also correlated with the underlying ETF, because the 15-minute and the 5-minute time frames were still bullish. When the S&P futures, because the math is different, this trades 23 hours in a day. The spiders, the underlying ETF, I have it programmed for real-time hours, which means from 9:30 to 4. Okay. So with that, when I got the buy reversal on the first pattern was the pullback on the spiders on the 15-minute time frame that got the real good pullback on the S&Ps below the 27.5 level. And that was the first pattern. And again, the way I have my market set up is I have a 3-minute, the 5 and the 15 on the S&Ps, and the 5 and the 15 on the spiders. And then I also have the underlying ETF and the continuous contracts underneath me, underneath at the same time, looking at the bigger time frames. Okay, it's really important that been doing this for 41 years, that during the US session, it's really important that when you're trading the markets, that you cannot just, based on my research, that you cannot trade just basically looking at just the S&P futures using my software. You need to have the underlying ETFs aligned next to it, because the underlying ETFs can tell you things that you may not be able to see using my software on the continuous contract. So in this case, for example, it was just perfect that the 5-minute time frame reversed to buy right here. Okay, and not only did it correlate with its 15-minute time frame, it also correlated with the underlying ETF on the 5-minute time frame. So that was a really great buy signal. And then here's the pullback, like I said, off the 3-minute. Here's a pullback on the 5, and this pullback right here down to 50. I think we got down to 51 and a half or something like that on the S&Ps. Let me see exactly. Got down to about down to the 51 and a half level. And now we just rallied up. Look at this on the 15-minute time frames on the oversold condition. We just rallied north of 10 handles on the S&P. When you trade the markets, based upon my research, I look at, like I said, multiple time frames. I do look at the 3-minute time frame on the S&Ps. To me, the 3-minute time frame is probably the most powerful. When I look at the S&Ps, I do have the 5 and the 15 with the spiders on the 5 and the 15. And then, like I said, behind me, I have the continuous contract on the 30 and 60-minute time frame. And I also have the spiders, the SPY on the 30 and 60-minute time frames as well. Okay. I want to show you today, if you're trading the NASDAQ futures, I want to just show you the Qs here. If I can type this up here. Okay. So now coming into the day, I already knew that the QQQs were in were in buy mode on my 30 and 60-minute time frames. Okay. We're in buy mode on my 30 and 60-minute time frames. And then today, when we had the gap up and the spiders reversed to buy right here at 9:45, the first thing you do now is you say, okay, now you have the Qs lining up on the 15. They correlated with the 30 and the 60-minute time frame. Okay. And then what is the next thing you look to do? Now that all the big 3 time frames, the 15, the 30, and the 60-minute time frames aligned, okay, then what do? You look to do what? By the first pullback on the 5-minute time frame. And boy, oh boy, did that ever happen. Here's the pullback right here on the 5-minute time frame, right here on the Qs. And the NASDAQ futures, again, if you just take the Q pattern, the QQQs, and you mirror it to the NASDAQ futures, it's perfect. So the Qs, by the Qs reversing to buy on my indicator 4 on the 15-minute, which is my trend algorithm, now aligned with the 30 and the 60-minute time frame, guess what? Then you look to buy the first pullback. All 3 time frames are aligned. The 15 is now correlated with the 30 and 60. You buy the first pullback on the 5-minute. Here's another pullback on the 5-minute. And this pullback right here was the pullback on the 15. So we had 3 really great long patterns today that you could have just traded the NASDAQ futures, the S&P futures, or the Russell futures, or the Dow, or the YM, the Dow futures. Really great longs here, I have to say, in a trending market. Now, basically on the bigger time frames, we are, if you're looking for swing trades, we are extremely overbought now, almost 98 on the dailies right now. We have come from the 51.20 up to 60 range. So 65 range, whatever. So we're up about 440 points in 9 days. Come on, So eventually, now that I got a buy reversal on my dailies, the low of 51.20 should hold for a while. Any pullbacks will make higher lows here going forward. Again, a lot has to do with these economic numbers, and we're still in this seasonal time period. August and September are really not good months for the market. I do think we'll make some type of a bottom sometime in October, and then we should head right back up again. So this is how I look at the market. Okay, I have all my information in front of me. I can see things right before my eyes, and I'm able to identify the moves in the market based upon how I'm seeing things, based upon the work in front of me. Again, I spent close to 10 years of my life building this. So this to me is I'm able to see the market direction. And the way I look at the market, there are 5 conditions and 10 strategies. The 5 conditions: a trend, a buy reversal, a sell reversal, a correlation, a disconnect. And of each of the 5 conditions, I have 2 strategies: a buy and a sell divergence. Okay. And there are different forms of buy and sell divergences. All right. So this pullback right here is a buy reversal / correlation, because the 15-minute time frame on the QQQs reversed the buy. So it's a buy reversal, but it also correlated with the 30 and 60-minute time frames. And then on the pullback, you got oversold right here on indicator 3 into a positive MACD, rising ADX, huge buying pressure. You better be buying that. That's all I know, right? It's a monster long, okay? And then, of course, the 15-minute time frame is the first pullback on the 15 after they correlated. So the Qs just to give you an example, on the NASDAQ futures, right? The Qs just ran north of $1. So if you look here, I'll look at the QQQs here. On that pullback, the Qs just got down to the 422.80, and they just ran about $1.20. NASDAQ futures on that pullback, just to give you an example, on that pullback off the 15-minute time frame, got down to probably around the 19,000, say 520 level, okay, 19,520, and the NASDAQ futures just ran about 55, 60 points here, okay, now making new highs here. So again, the 15-minute time frame, really strong, very, very strong, gave you the ability to buy the pullback, and it's really important that you understand these how these patterns repeat. By having this software, it enables me to identify these patterns that repeat themselves. Okay. So I said the trade of the day is going to be the 15-minute time frame on the pullback. And here it is. You can see again, the Qs just rallied, now trading 80. So they ran about 60 points on that pattern. That's a beautiful pullback. That's the first pullback on the 15-minute time frame on the QQQs. Okay, when this all happened at around 1 o'clock, the QQQs, the spiders on the 15-minute time frame at around 1 o'clock. Very, very, very strong pattern. Okay. And this is how you're able to identify the markets, by using these indicators. Now, one of the things like I tell people all the time is, yes, indicators lag. And guess what? However, with that being said, that price leads, indicators lag, but indicators set up the pattern, right? The price leads, the price will adjust the indicators, and then the indicators will align us with the right patterns. And that's really, really, really important. Okay, really, really important. If anybody has any questions, please ask away here in the studio chat. And again, so if you're looking at the market, right, to be able to have the proper technology in front of you gives you the confidence, because I have 5 keywords. My first word is consistency, discipline, confidence, patience, and passion. So consistency is everything, right? You want to always go home in the green every single day. You don't want to fight it. You just want to hit your goals and then stop. And then discipline, obviously, preservation of capital. If you're wrong, you're out, and you have to adhere to stops. And then there's always another trade to fight to come back. And then if you think about it, right, the third word is confidence, right? So not only do you have mentors like myself, but you have software that you can identify, excuse me, right before your eyes. Like the S&P future just now ran from 51.5 up to 63.5. They just rallied about 12 points. NASDAQ just ran 60 on an oversold condition on the 15-minute time frame. And I said, the trade of the day is going to be the 15-minute time frame. But with that being said, what's important is to be able to be on the right side of the market, and then to be able to have the confidence, the understanding of the markets, using technology to help you really see which way market direction. You don't want to be guessing, right? Also, the other words I have is patience. You wait patiently for the pattern. So when we pushed up here, right, and I was waiting patiently for the pullback, I waited patiently. Boom, here's one, here's two, okay, and then here's three. Okay, three great patterns today so far. Normally, my software gives anywhere between 4 to 6 great trades a day, meaningful trades in a day. And what's really important, right, is to understand how to use multiple time frames. So whether you're trading individual name stocks or like you're trading the futures markets, you want to be able to identify. If you look here at the diamonds, you look at the diamonds. If you're trading the Dow futures, okay, coming into the day, the identical same pattern. But in this example here, the 5-minute time frame reversed to buy right here, okay, right here. So coming into the day, I already knew that the diamonds, the Dow futures, was bullish on the 15, the 30, and the 60-minute time frame using indicator 4, and you can see it right here. I came in bullish, and then when the 5-minute time frame reversed to buy, it correlated with its 15-minute, correlated with its 30-minute, correlated with its 60-minute time frame. What do you look to do? You look to buy the first pullback right here if you're trading the YM futures right here, and then here's the other pullback right here. So you had some really great longs here along the way. And when you got this deep oversold condition on the 5-minute, you can see the MACDs were positive, rising ADX, good buying pressure. This was a very, very, very good long here on the pullback on the diamonds. So if you're trading the Dow futures, again, you need to look at the underlying ETF like this, the diamonds, and or look at the SDAOs as well, which I have up as well, and that gives me more confirmation as well. Really important to see that. So very, very, very big strategies here, using multiple time frames, being able to use the indicators and use the correlation methodologies. So again, the 5-minute time frame on the diamonds correlated with its 15. I already know by looking at it, I can see the diamonds are bullish on the 15, the 30, and the 60-minute time frame coming in. And so when the 5-minute time frame reversed to buy, I knew that pullbacks needed to be bought on the Dow futures or the DIA underlying ETF. Very, very, very important to understand that. So when you're looking at the market, it's important to use multiple time frames, especially trading the futures markets during the U.S. session. Now, if you want to trade the Tokyo or European session using software like mine, then you can, because obviously the U.S. markets are not factoring in the ETFs at that hour. We only use what's called RTH, which is real-time hours. So meaning that I only look at the data for the ETFs from 9:30 to 4. It's very important. My research is showing me, I talked to some of the top hedge fund managers in the world, okay, that you cannot trade based upon my research. It's very difficult to trade using just the S&P futures, the NASDAQ futures charts without looking at the underlying ETFs. It's really, especially those of you here at Tradier Futures, I'm more than happy to teach you this, help you along the way. You can text me or call me at 914-500-7484. I'm always willing to help people. It's nothing better than to help change people's lives and be able to really understand basically my 41 years of experience and being able to help you along the way to make you a successful trader. And that's really what I love at this point in my life. It's really, really important. And for me, I think it's imperative that to pick up and understand buy and sell divergences of all magnitudes. Now, basically, right now, you can see here, I have a MACD negative, which is blue over yellow. And you're going to see here, if we make new highs, we should potentially fail here, okay? Because of the fact that these MACDs, if you take your horizontal line right here, you can see right here, if a little lower, that if we make new highs here, we're going to run into a brick wall. Okay, so if the Nasdaq and S&P futures make new highs, once you get an overbought condition here on the 15, I would be more of a short seller up here. Okay, because these MACDs are non-confirming on the 15 and on the 5-minute time frame, meaning that the price action is going to make new highs, and the MACDs are not going with them, right? And so basically, I would wait for an overbought condition. What's an overbought condition? When my indicator 3 probably gets into the 90, 93 range, and then you're making new highs, and I think there'll be a good opportunity for a short there. But really great patterns today. The 15-minute time frame really was beautiful here on the S&Ps, and a lot of patterns set up at the exact same time. So again, it's about being on the right side of the market, trading the market efficiently, using software that's going to enhance your trading. A mentor like myself who's been here, has done it, who's traded his whole life, and to be able to guide you and assist you and understanding how to use technical analysis and your ability to trade the futures markets. Like I said, for the second and third time, I've taught some of the biggest hedge funds and managers. I show them my methodologies, and they loved it. So now it's my turn for you all to love it, and for you to really be successful in your trading here at Tradier Futures. I'm so honored to be able to have this ability twice a week, Tuesday and Thursdays from 1:30 to 2 each and every week to give you this 30 minutes. And again, if anybody needs any questions asked, just text me or call me 914-500-7484. We have about 3 minutes to go here. If anybody has any questions, please ask away. Right now, we're seeing some stocks make some new highs, like Tesla and Nvidia. Very big moves here. However, I want to just show you we are extremely overbought here. Since in the last 9 days, we have now have 4 gap ups since that deep oversold condition. And guess what? I think these gaps are going to get filled. I think we're going to get a pullback on the daily charts. Right now, we're over 100 points on the daily time frame on the S&P futures. We were once 340 negative from the price to the moving average. We've made that all back plus 100. Okay, so now we're getting a little frothy here. Okay, and we do have some really big resistance levels here coming up. 55, like 80, 5,600. Remember the old highs right around 57.35 or so. But again, what we're seeing here now is we're seeing an extreme overbought condition on the dailies. So I think any pullbacks in the next 3 to 5 days will make a higher low, and we should head back up again. All right. This was a great session. My God, 30 minutes just goes like this. Really looking forward to seeing and hearing from each and every one of you. Have a great day. Again, if anybody has any questions, please feel free to reach out to me at 914-500-7484. I'm so excited to be here. Back to the futures. Futures trading is it. It's going to explode. It's been exploding, and I just see significant upside for all of you going forward. Have a great day, everybody, and God bless you all. Be well.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.